Good morning, everyone watching live on BAM YouTube. Let me know in the comments which market you are tuning in from today. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's hot sheet, I will fastly cover Zillow's earning report, January PPI, jobless claims, housing starts, and mortgage applications. Today is Thursday, February 16th, 2023. I am Byron Lazine, and the hot sheet starts now. Not entirely sure if fastly is a word. Quickly would be the word. Thank you. I appreciate that. Let me know in the comments if you want me to start using fastly so I sound like a complete moron. I am here in Orlando in Ken Pozak's studio. Probably the best studio, single use studio I've ever seen. Ken has a phenomenal YouTube channel. Go check out Ken's YouTube channel. Certainly, if you're an investor in Orlando, we're going to link it down below. You'd want to check out that YouTube channel. Or if you're an agent and you want to know how to do a local city YouTube channel, Ken's got the best in all of real estate. We've got a lot to cover because we're right up against a live event that we're going to be doing at 10 a.m. This is your last chance to get a ticket to that event. We have a BAM price down below. We're doing the Chat GPT workshop from 10 a.m. till 1 p.m. with Chris Smith. He just walked in. And so we have a lot going on here today, but we also have a lot to cover on the hot sheet. Hit the thumbs up if you are ready. And let me know if maybe you want me to go deeper on any of these particular topics on tomorrow's hot sheet. I could certainly go for even maybe 45 minutes, maybe the longest hot sheet live stream we've ever done. So yesterday I spent an hour, maybe an hour and a half of my evening before I drove up here to Orlando, reviewing the Zillow earnings report. Zillow earnings came out just yesterday, and I listened to the entire call with Rich Barton and the executive team. Let's get right into what they had to say. So Zillow Group, which is transforming the way people buy, sell, rent, and finance homes, today, announced its consolidated financial results for 3 months ended in the year December 31st, 2022. While navigating a slow and difficult housing market in 2022, they were very, quick to state how difficult the housing market has been. We're keeping our eyes on the future, our vision of building the housing super app. That is the focus right now, is this super app. And Zillow continuously, if you've listened to any of their past earnings reports, the last one and certainly this one, they continuously talk about 3% market share. They're impacting 3% of all transactions across America. And their growth strategy right now is taking that number from 3% to 6%. They feel with how much online traffic, and we're going to get to that in a second, how much online traffic they actually have right now, they feel that 6% is still incredibly low. They're very passionate about building this super app where you can get everything all in one place. That top line where they talked about buying, selling, renting, and financing homes, they want that all in one place. That's their vision of the super app. Rich Barton also said our consolidated Q4 results outperformed our expectations. The stock reflected that. The stock went up yesterday in both during the day and in after hours. And we've been rapidly shipping products aligned with our 5 growth pillars. Okay. I took extensive notes. I'm going to read from my notes here a little bit as opposed to their corporate talk. Their 5 pillars for monetization are tours, financing. They're really talking about financing mortgage quite a bit. Seller solutions, which they haven't launched yet, but they're going to be launching this year. Of course, if you've been following Zillow, they've been trying to create opportunities, listing leads, seller solutions for a long time, and they haven't been able to figure that one out. Obviously, Zillow offers and them, going out and being the big iBuyer was one of those approaches that did not work. Their partners, number 4, right? The premier agent partners, and then integrating all of the services into one platform. They bought Showing Time, right? And so all these different Dot Loop, all these different services that they have. In the first 5 minutes, I thought it was interesting in their prepared statement on the earnings call, they mentioned Opendoor. I found that interesting because listen, Opendoor stock is in the tank. Let me know in the comments if Opendoor is still active in your market right now. They also mentioned that their partnership with Opendoor by the end of the year is going to go nationwide. So Opendoor, despite the struggles that they're having, Zillow's partnership remains to be strong with them, and they're considering that one of their lead generators right now for finance, for opportunities for their premier agents. So I just found that interesting how quickly they went into talking about Opendoor. They talked about their traffic within the first 5 minutes. It's obviously, their biggest advantage is their traffic over any of their competitors. Okay, and actually, let's go to that right now. I've got a slide here that you can get all of our slides down below. Daily download. They talked about this a lot. Their year-over-year monthly unique user growth. The yellow line is the top 15 real estate sites combined, excluding Zillow Group, year over year. This is per ComScore. ComScore is going to show you all the data on these sites, okay, for organic traffic. Zillow Group is the blue line. So you've got the top 15 sites combined. That would be, you can name some of them: Realtor.com, Redfin, and then 13 others in that category, right? So Zillow Group year over year actually grew 1% monthly unique user growth, while the other 15 combined dropped 8%. They have huge, staggering numbers for their traffic, okay? And this is why I always talk about Zillow's data being so critical when you're looking at the housing market. They've got more traffic than anybody. They've got more buyers, using that portal than anywhere else. Listen, they talked about the pent-up demand. They talked about the fact that they're still seeing a huge rush to people looking at listings right now. And that's an indicator that every time these interest rates, like we talked about yesterday, do drop down to 6, that there's going to be a little bit more activity. Okay. They also, let's get into some more of the notes that I took down here. We're going to go quickly in the comments. Let me know, or hit the thumbs up, like jam the thumbs up right now if you want me to go deep dive on Zillow earnings report, because we just don't have the time, unfortunately, here today on this hot sheet, but I can do it tomorrow. I can have all the time, potentially all the time in the world. Maybe not all the time, because I know we'll be up against the gun again tomorrow. Okay. They call this a consequential year, 2023 being a consequential year. Ultimately, what happened in these earnings is they saw revenue dip in Q4, but they trimmed a whole bunch of losses, right? We know that they let go 2,000 people last year. We know that they got out of all the inventory. They're coming into 2023 having no inventory from that iBuying venture, but this is a consequential year to make sure that they continue to grow premier agent margin. They continue to build on the financing and the mortgage, which they were not profitable in Q4 on mortgage. They believe that over the next 10 years, looking at the entire industry, there's going to be 60 million sales over the next 10 years. Okay. So that's averaging 6 million sales a year. We don't expect to get there this year. So that's interesting that they said that. They talked a lot about Listing Showcase. They had a lot of questions about Listing Showcase. Okay. They think it's going to help both agents and sellers. So they're probably going to start monetizing listing placement. Okay. We know that CoStar has been rumored to do that if they buy Realtor.com. Rich Barton was asked how CoStar coming into the industry would impact. They certainly deflected. I could get into that deeper tomorrow. They also talked about a tighter set of partners. Okay, right now, one thing Zillow's doing is they're shedding non-producing partners, premier agent partners. So if you're not a partner right now, if you're a real estate agent, based off of that traffic that we just showed you here, I don't know an agent that wouldn't want to be a part of this type of traffic. You got 15 of the national websites that can't even touch Zillow. They don't just own online traffic, they dominate it. And yet they're trimming their partners. So their top partners, their top premier agent partners are going to be getting even more of the lead opportunities. Okay. They want an end-to-end solution for consumers, right? They talked a lot about financing first. 40% of consumers start this way. I thought that was a very interesting stat. 40% of consumers start with financing first. They want to capture those and then bring pre-qualified buyers to their partners. Okay, so a lot going on in Zillow. Those are the highlights. I know I was scattered all over the place because we've got this ChatGPT workshop up against the gun. This is the last call for it. You can get your $69 price, 10 to 1. You get access for 7 days. That link will be down below. But let's move on because we've got a lot to talk about. Unfortunately, today was a big news day. We've got January PPI that was out. So more bad news on inflation. Inflation is hot again. Okay, so this PPI number rose 0.7%. The expected number was 0.4%. Okay, so inflation continues to come in hot. Not good for what's going to happen with this Fed meeting in March, the FOMC meeting. We're expecting right now that they may even go 50 basis point hike. Okay, so on a 12-month basis, the headline PPI increased 6%, still elevated but well off its 11.6% peak in March 2022. So if you're looking for a little bit of a silver lining, you do have that. Okay, moving into our jobless report, which just also came out today. Just a lot of stuff happening. Jobless report. Initial jobless claims, rather, proxy for layoffs, decreased 1,000 to a seasonally adjusted 194,000 last week. The expectation was 200,000. So jobless claims continue to be very strong. This is counterintuitive to everything we're talking about with, hot inflation, right? This is like we've got hot inflation, but we've got a really strong job market. It's counterintuitive to the argument of a quick recession. So jobs continue to be strong and beat expectations this week once again, which will likely be something that the Fed takes into consideration, and they'll look at that as a negative because it makes their job even harder. We had a housing start report today. Housing starts were 1.31 million versus a 1.35 million estimate. That's on a seasonal adjusted number, which is down 4.5% versus the expected down 2.3%. So unfortunately, we need more inventory, and we're not getting it from new construction. Okay, we are expected to only drop 2.3%. We dropped 4.5%. You see here the housing start number, and you can get all these charts down below in the daily download. Is at 1.31 million. Next release is going to be March 16th. You have a chart here that shows completion, starts, and permits. And so permits are dropping, starts are dropping, and completions are they're up a tick, but overall down from the last couple of months. So there you go on new housing starts. Mortgage application data also came out yesterday, and unfortunately for demand, people looking at demand right now, with the interest rates that went up, we have mortgage applications dropping once again. So mortgage applications, according to Mortgage Banker Association, here we go, are down 7.7% from 1 week earlier. Again, according to MBA, this is seasonally adjusted purchase index decreased 6% from 1 week earlier. The unadjusted purchase index decreased 5% compared with the previous week. But this is 43% lower than the same week 1 year ago. We talked about this yesterday. Okay, so we're 43% lower than 1 week than 1 year ago. We can't look at year over year numbers. Obviously, Q1 2022 was crazy. We also have really low inventory. So there you go. This chart's down below for you as well, showing you the decline in demand that's happening right now. Okay, and this is all due to these mortgage rates, which yesterday hit the highest level in 2023, 30-year fixed at 6.75 yesterday. The 10-year right now is up on the morning. We're up over 6.85. I'm sorry, 3.85 on the 10-year. So I do expect the 30-year fixed mortgage rate to go up even more today from the 6.75 level yesterday. Okay, last call for that ChatGPT course, which we are going to be starting in just 15 minutes, 10 to 1, right here live from Orlando. We're going to be doing that ChatGPT course. You get the BAM price, $69. You get access to it for 7 days. That link is below. Don't miss it. And let me know if you watch the replay on this. If you want me to go deeper on any of these topics tomorrow, I will definitely do that, and we'll be able to go take a deep dive on the hot sheet. Thank you guys so much. Please share this with somebody who finds this look back on the housing market relevant. And until tomorrow at 9:30 a.m. Eastern, toodaloo.